It's Michael Robbins here. It's June 22nd, just coming into another week of trading. Let's look at the past week. It was quite a ride, and we've shown some weakness here. This COVID rebound. Right now, futures are up. But there's a lot going on in the media about increased cases, yet that usually not affecting lockdowns. Um, this was last week. The Dow, losing 600 points as cases spike. Um, Futures are actually up at the moment. Um, Not dramatically so, but yeah, you got what 1% on the Dow and the S&P, um, maybe making up for some of last week's losses. Um, there's a few people talking about the dollar about to take a hard hit, but um, not much news on Seeking Alpha today about market projections. Over on Fox, it was fairly optimistic, but here's some interesting data here how the retail and other sectors have fared. But perhaps the real story of the day came in this conversation I was having with the guy who helped me trade my hedge fund 20 years ago, and he was spot on, really. The 2 trillion that the Fed put in has somehow made its way into the market, and so here you go. Right, the U.S. banks are swimming in money as these stimulus checks and emergency business loans um, have gone into banks and just haven't been spent yet. So here you go. Right, here's the $2 trillion jump in commercial bank deposits, and um, it's grown considerably, and so there's talk about how the banks with all this cash are going to have to reduce rates even more, um, and right, since they don't, they don't need any more of your money. I believe that this sentiment was echoed elsewhere, but maybe we'll wrap it up with this one. 5 charts to track how the U.S. economy is recovering from coronavirus. Right. So this is changing request for directions on Apple Maps. So yeah, kind of interestingly, there was never really an inversion much here in the driving and walking, that the relative preferences. Well, no, you know what? Actually, walking used to hit a higher high than driving, but now uh, driving directions are running higher than walking. Um, and transit very, very slow in recovery. Amazing to see. Restaurant bookings dropped 100%, and have crept up. So now they're only down about 62% from where they usually are. Hotel occupancy, yeah, doing a little bit better than I anticipated. Um, it seems to have recovered almost half. Air travel, very slow recovery there, and I think it's probably echoing the consumer behavior that we see in transit, right? When you're just packed with dozens and dozens of people. Um, that's not really the case at restaurants. As usually when they open, they're limited to 50% capacity, and of course, hotels, once you're safely in your room, You're not surrounded by dozens of people for hours on end. Home purchases, amazing, amazing chart right here. Um, don't really know what to say about that, but it's it's got to be the interest rates and maybe that influx of cash. Um, really, really interesting times, and they will look back and wonder what was going on and what were we thinking. In hindsight, will be in 2020. Have a good one.